Earlier this year, the World Bank Group announced a major overhaul to its guarantee program to boost simplicity and improved access, faster execution, and announced ambitious new goals to boost annual guarantee issuances. Can you explain a little bit, what do these changes mean for MIGA and why are they happening now?
Tobias, they're happening because we've come to the realization if we want to mobilize more private capital into emerging markets, which is an objective of ours given the need, we're going to have to figure out a way how we can actually make it easier for the private sector to access guarantees, which are viewed as critical to mobilizing private capital. And right now, those guarantees are spread throughout the World Bank Group. And in talking to investors, it became clear it would be far better if we could create a single storefront for all guarantees. And it would be very helpful if we could come up with diligence and execution that's pretty much uniform, irrespective of whether or not it's a guarantee that's going to be booked on the bank's balance sheet, it's going to be booked on IFC's balance sheet, our sister organization, or booked on MIGA's balance sheet. So that's the overall objective, is to create a single storefront, streamline the process for execution and diligence, and we hope that will mean more guarantees get used by the private sector, and thus we mobilize more private capital. We also believe this will mean we will be in a position to combine guarantees in ways that were difficult before. There are going to be certain projects where it may make some sense to combine, let's say, a bank partial risk guarantee with a MIGA PRI guarantee, right? And when you have all of the guarantees under one umbrella, that becomes far easier.
Thank you. Veronica, what do these changes mean for reinsurers and Swiss Re in particular?
Well, for us, for the reinsurance industry, this is actually a very interesting model because we have the possibility to share in these risks in a very structured and organized way. What is unique about the partnership that we have with MIGA, as Swiss Re, but as an industry overall, is that this is coming with two unique values. One is additionality, so the type of projects and risk-bearing investment opportunities that we come across will never cross our desks because these are very complex projects. Political risk is heightened in markets where we don't have, familiarity. It's long dated, and so it can create some real volatility on our balance sheet and can be costly to acquire. And obviously, working alongside partners like MIGA gives us this implicit comfort that these projects have been well selected, well structured. We have seen how fantastic the underwriting capabilities of the agency is. And so we feel much more at ease deploying large risk-bearing capacity. The second advantage we have is being part of the World Bank Group. We know that these projects are not only well underwritten, but they're also very well assessed from a sustainability and an impact perspective. And so we're very enticed to put more capital at risk in projects that are also structured the right way for the right impact.
Ethiopis, Veronica addressed reinsurance. Why is reinsurance an important tool for MIGA, particularly in the context of the new guarantee platform?
Reinsurance is critical to MIGA by virtue of the fact that we have a limited amount of capital supporting a pretty sizable portfolio. And growing that portfolio is going to mean reinsuring even more so we can recycle the capital we have in support of the projects we want to pursue. I don't know how well known it is, but we only have $2 billion in capital. Supporting a $30 billion portfolio. That's only possible by virtue of the ability to reinsure. We're now trying to get to $20 billion in annual issuance. That's not going to happen without partnerships such as the one that we have with Swiss Re and other reinsurers.
To tackle the impacts of climate change and foster economic growth, unlocking private capital has become a major policy objective. So Veronica, I'll ask you first, what can reinsurers like Swiss Re do to fill the huge investment gap in emerging markets in particular, and to help achieve Paris-aligned objectives?
Well, I think the key to success is mobilizing more capital, but faster as well. And so as you know, Tobias, we have a dual objective at Swiss Re, building societal resilience, but also helping sustain economic growth and prosperity, while we go after our legitimate corporate interests. So in our collaboration with MIGA, with other multilaterals, I think we're excellently positioned to really hit on all of these targets. And let me tell you why and how we can do so. We can help absorb risks that are fundamentally shocks, for instance, around natural catastrophe or climate. But as Ethiopis pointed out, there is also a lot of uncertainty that investors feel when they're going into investing, making foreign direct investments or investing in projects associated with political risk, with countries that they don't know, they don't have experience with, maybe where there is more socioeconomical uncertainty or political uncertainty. So this is how we can really make a difference. We can help de-risk these investments together. And I believe if you look at Swiss Re also as an investor, we tend to be, as an industry, quite conservative. We like stable returns, and we like to know why, because we have to be ready at any moment in time to pay claims that we assume this promise to actually pay claims quickly is really important. But we also have a long-dated book, and we have an ability to invest in mid to long-dated projects. So how do we bring this dynamic together? I think the first step for us is also demonstrate to investors out there that with a good integration of financing and insurance, we can help take care of all the tail risk that exists in these projects, making the risk return more balanced, more attractive, and critically, we have to do that faster and faster. One thing that we've done, having experienced a really deep alignment, understanding, good results, intent being, very much shared amongst us, we've decided to move from a project-to-project basis into a facility so that Ethiopis and team can actually move much faster. And I understand this speed in capital mobilization is incredibly important in the current juncture, and it's something that we are happy to deliver to the bank and to MIGA as part of our contribution to get things done together faster on a bigger scale.
Ethiopis, over to you. What does private capital mobilization mean for MIGA?
I'm not sure I can speak as to how it's different for other DFIs, but certainly for us, it's the raison d'être. That's why we were created. We were created to promote foreign direct investment into emerging markets, frontier markets. And we do that in several ways. As Veronica has indicated, we give courage to investors to actually invest in projects in countries where they may be concerned about the political risks, but are prepared to actually make that investment with some protection and cover from us. We mobilize lenders into those same projects, right? So that they actually lend. So the sponsors are taking equity risk. The lenders are lending into these projects to address the needs in those financing needs in those projects. And the third way in which we mobilize is through reinsurance. You're putting capital at risk, much in the same way that these other investors are putting capital at risk. And for us, this is an important component of mobilization. You are private sector actors that we have pulled into emerging market projects. But mobilization is why we exist. The whole idea is for MIGA to make it comfortable for investments to be made into markets and into projects that may appear risky from a political standpoint.
So the last topic area that we'll be talking about is looking forward, sort of the next frontier, particularly looking forward to the 2024 World Bank Group and IMF annual meetings and COP29, which has already been dubbed the Finance COP. So I'll be asking you about what is the next frontier for reinsurers and MIGA, and what are your aspirations? Veronica.
I want to pick up from where Ethiopis left, this public-private relationship and structuring with some explicit intent and alignment is really fundamental at this juncture. So we have this ambition of wanting to make the world more resilient, but as Public Sector Solutions team, we also know that there is a real urgency to getting into the action. And as you know, Tobias, there has been a convergence of crisis and uncertainty. So we're in a highly uncertain phase of our geopolitical economic momentum. We want to meet this moment, but to be able to do so effectively, we need to work with partners in a very explicit way. And on the one hand, I think the world in which we operate requires governments to have conducive policies, removing barriers, aligning around good incentives. So for instance, around project preparation, having projects that investors will be excited to put money towards. The multilateral development banks have a unique absolute capacity through technical assistance to support this development of projects. I can imagine that much more investability is going to manifest when we have rich pipelines of well-structured projects. At the same time, that requires us to, and this is my prediction, PPPs, public-private partnerships, are going to be a very useful tool, one that is used up and tapped into more and more often. But the way we should up, each of us in those public-private partnership, is not just looking at our direct interests. A government wanting expansion, MIGA wanted to ensure that the developments are happening, Swiss Re and the insurance industry wanting to get a fair return on the capital deployed. As I look at the World Bank meetings at COP29, for us that is a core principle on top of staying into our responsibilities and where we have a capacity to deliver. It's a core principle that unites us all. And I think we have had really incredible positive set of experiences with the World Bank just in the last 2 years. The fact that we've been able to support large infrastructure projects and protect them there where markets did not exist, for instance, earthquake, that crowded in financiers and means energy is now available in countries like Nepal, where they had an energy scarcity. And without that, no economies develop. The work that we've done with MIGA now creating full facilities, and I'm excited at what the new guarantee platform will do for the future of mobilization. With the IFC, we've started with a dedicated facility, 3.5 billion for financial institution lending. And I think this type of partnership that are ambitious in scale, ambitious in what we are expected to do, push us to go over and beyond is what is needed. So I look at the World Bank meetings as a moment in time where more of these partnerships can be cemented, more ideas can be launched, and we can move faster together.
Ethiopis, the same question to you.
So I want to tee off of the point that Veronica started with on the juncture at which we find ourselves geopolitically and what that means for all of us in terms of action. I think Veronica is absolutely right in saying that we need to think about how the allocation of benefits and risks are taking place in the projects that we're advancing as part of development. And I don't think we will succeed in mobilizing more capital and getting countries to accept private sector investment as a means of advancing their development interests until they have the sense that this allocation of benefits and risks is done in such a way that doesn't place them at a disadvantage, right? And so there is, in our partnership, that's something we need to sort through. But in terms of innovations and things we're doing to try and mobilize more capital, by way of example, again, and it's interesting that we're thinking along the same lines. We have historically provided cover on a project-by-project basis, but we're realizing that for a number of investors, what they really need is for us to provide some sort of portfolio cover, right? Mm-hmm. To cover their portfolio of investments in emerging markets. That's going to require that we think through how we go about assessing risk, how we go about managing risk, how we go about pricing risk. And so during the course of annual meetings, we'll be having conversations with investors about this approach and see what progress we can make there. In addition to that, we're doing a lot of work in the energy space, particularly with respect to mini-grids and off-grids, a solution we see as being very important in many parts of the world, particularly in sub-Saharan Africa, that are remote and off the grid, and the grid is not likely to get there anytime soon. And then we're spending a lot of time thinking about the role we can play in advancing carbon markets. 2.5 years ago, we held an event. And my big takeaway from that event was it's a market that is relatively small, could be much bigger if we could address certain political risks. What we heard is we're very concerned about political risks around the use and delivery of carbon credits that certain projects may produce. And we're thinking to ourselves, well, that's the business in which we find ourselves, right? So we're now working on developing a letter of authorization against which we would provide cover against the corresponding adjustment risk, in addition to the risk that you won't be able to use the credits that you've bought in the way that you intended when you bought them by virtue of some government action or inaction. Again, we'll have lots of conversations with counterparts, both private sector and public sector, during the course of annual meetings in the interest of, again, advancing the role we can play and addressing this concern, these risks, and seeing whether or not by virtue of the cover we provide, we can actually grow these markets to a size that allows for the kind of transition that we need to undertake if we're going to get to net zero.